everyone. Welcome to the Stock Market Morning Prep video for Tuesday, December 23rd. A couple days before Christmas here in the States, and the Santa Claus rally is upon us. As you can see, we've been rallying for the last about 4 or 5 trading days. Right after Janet Yellen concluded at the Fed meeting, which we all kind of figured this would happen. The markets liked what they said. Obviously, she wasn't going to rattle the markets couple weeks going into the end of the year. And sure enough, the markets have rallied since then. We did say that in our analysis, so we had some analysis that was pretty spot on from the beginning of December, looking for some tax selling, some markets being under pressure, and then, of course, right after the FOMC, I mentioned, look for the markets to rally. That is obviously if the Fed did not say anything to disrupt the markets, and sure enough, that's what we've got. And we've got a big jump up. Very low volume, obviously, is to be expected because of the holiday. So where do we go from here? Well, the picture in front of you, the chart of the IWM, which is the Russell 2000 ETF, is the key. That holds the key to what this market is going to do for the several trading days left of 2014. It looks like we have a breakout, as you can see here. We've gone sideways all of November and December, pretty much a lot of chop. And now we've broken out of this range. And as you can see, this volume profiles here, these zones, thin zone all the way up. So I'm looking for continued move up, and I'm looking for a target of anywhere between 2100 and 2130 in the ES. So looks like we're going to get there. We should get there with no problem. So let's keep an eye on the IWM. I want to run through the other indexes here too. But before I do that, let's talk about crude oil here. Crude oil sold off on OPEC ministers actually affirming that they will not, and they mentioned it several times in their statement, they will not disrupt and cut production no matter how low oil goes. So obviously that spooked the market again, and oil came in again yesterday. Now we're up a little bit in the pre-market, but I would be cautious in oil, and I'll tell you why. The oil, everybody, it's just like any other market. You know, the markets are made to fool the masses. The way oil has been bouncing at the lower end of the range tells me that we could have one scary leg lower, and that's to be expected. Now, that does not have to happen, but I always look for, that contrarian, if you will. I'd like to see oil, if oil dips into the 50 to 52, even into the high 40s, I think that's when you want to step in and start looking to buy crude oil, and you could do that versus the USO. Now, however, the oil stocks have been doing quite well, and what happens is when you're looking for a bottom in the future, look for the oil stocks, because the oil stocks that are holding up relatively well, even they have been cutting in half, if not a third of their price target since June. So what I would be looking for is in 2015, in early 2015, because oil stocks come into seasonal strength in the beginning of January. And the future itself, crude, comes into seasonal strength at the end of January, beginning of February, just ahead of the driving season in the spring. So I would be looking for stocks like NOV, stocks like Hess, stocks like ConocoPhillips, COP, APA, Devon Energy, DVN. These are the stocks that are going to rally, and I think that you can hold them for a swing trade, especially for the longer term traders that like to hold stocks, and even in your IRA. I think that would be a fantastic bet going into 2015. But I'd like to see oil come in one more time and make that low, that capitulatory low that I'm looking for. I don't think we have it yet. That does not mean that it's not carving out a bottom. I just think that it hasn't really scared a lot of the individuals, the traders and the investors, because now we're kind of basing in crude. So I do think that we look for that one more push. And again, remember, it does not have to happen, but watch that going into 2015, and even in the last 2 weeks of the trading day, the trading weeks, because with the lighter volume and you get a decent amount of selling, this could really go a little too far beyond where it should go, and that means that's opportunity for us. Okay, keep your palates dry in the next couple of weeks. And then let's go into the indexes. So we got the IWM. This is going to be the key. If we break out, which we have, I do think that we grind higher the rest of the year. Of course, maybe some pause a day or two, maybe a little pullback, but I do think that pullback will be bought. 2015 will be another story. I am going to put out a big morning call video for projections of 2015 before the year end. Okay, let's take a look at the spiders. As you can see here, big move. Disregard the big tail. It's just data interference here. But as you can see here, we had a real nice move, and we just came right up in the last 5 days. Inside day, a couple days ago, now we're moving higher again. All of the indices are up nicely in the pre-market. And we have the spiders 30-minute now. As you can see here, and I only like to show this to you when we start to pinch. Now we're pinching. And I think if you were a gambling man or woman, I think the past the least resistance is higher. So we're pinching again. Let's see if we start to pop higher here, okay? And let's take a look at the Qs. Qs, the technology stocks have really held up well in 2015. So to me, I don't think challenging the highs is out of the ordinary here in the Qs, and actually all of the indices, to be exact. Here's the diamonds. As you can see here, big move, huge move, and I would suspect 18,000 would be in the cards in 2014 to conclude 2014. Remember, last year we made all-time highs at the last minute of 2013, December 31st, so keep that in mind. And then lastly is the transports. Again, doing well. All of the indices, the majors, are actually holding up quite well. And I wanted to mention one more thing, gold. There's really no reason to hold gold at these areas. I think gold will probably smash down to about 1,000. Anywhere between 900 and 1,100 in gold. I think we could start nibbling. I don't think you can actually. I don't think you'd want to buy gold here. There's really no reason for it. Inflation is very low. There's no fear factor, so the fear premium is really non-existent. So I would be looking to sell rallies in gold and looking to buy equities at the moment. Okay. So hopefully that helps. And just a quick admin note: there'll be no video tomorrow or Friday, and I'll probably put one or two out next week before the end of the year, as there's really not much going on. But look for one or two more videos before the end of the year. Have a great day. Merry Christmas to all, and happy holidays, and we will speak to you next time. Take care.